Good evening to all. So let's start with question number 3, in ratio analysis. In question number 3, we have been given balance sheet as well as income and expenditure statement, P&L account for the 2 years. Okay. So now you have to calculate the ratios asked given below. Calculate inventory turnover ratio. Number 1. For inventory turnover ratio, inventory and turnover. Turnover should be the numerator and inventory should be the denominator. Okay. So turnover by stock. Then you have opening and closing stock both. As you have the stock for opening as well as closing, it's better to take the average stock. Usually, stock will be valued at cost, so rather than taking the turnover sales, we can take the cost of goods sold. This one is not required, but anyhow, to understand easily, I have given this one ahead. So, cost of goods sold divided by average stock is the correct one. Right. We are going to calculate all the ratios for the current year, latest year. So, cost of goods sold for the latest year being 20,860. Average stock being, you add up these two and divide this by 2. How much? 2637. What is the ultimate value here? 7.9 times. 7.9 times. Then, in case of financial leverage, what's the formula for financial leverage? Very simple. In case of financial leverage, EBIT by interest. EBIT. Okay. So for the current year, these two will be taken. 170 by 57. The ultimate value will be 2.98. Return on investment, ROI. Investment here we mean shareholders' funds. This will be taken. And return for the investment being all the things put together. Predominantly you can take the EBIT. Or sometimes you can eliminate the tax alone. Okay. So you can take your own option. Here, EBIT divided by investment. Maybe you can take the opening or closing or better. Yeah, you have been given 2 no, so you can add up these two and divide this by 2.
1.7.
This value. Shareholders' fund. Average capital employed. How much is that? EBIT. Maybe 1 minus T can also be used. Okay, 1 minus T. Different options are there. You don't panic. Sir, which option can I follow? No need to worry about that. You can follow your own option and give the hit over that. And note on this. So EBIT being 170 into 1 minus T. What's the tax rate here? 57 is the tax on 130. Otherwise, what's the percentage? 57 by 130.
3.4%.
Huh? No, this value. Here is 23 now. 57, 23 by 57. 40%. So it is 40%. TB 40%. So 1 minus 0.4 divided by average capital employed. What's the average capital employed here? 1924. Okay. 2 point. Okay. Second adjustments. The final answer here being 1.9. Oh, average capital employed. No, it includes loan funds also. Long term also, right? Okay, you can take this one. This entire. Okay. Come on, divide this way, this value. What's the value of the denominator?
5251.
5.5251. 5. Okay. What's the final value? 1.94%.
Yes.
Now let's go for return on equity, ROE. For earnings available to equity shareholders will be taken here. So 34, E2 will be taken in the numerator. In the denominator, we can take the average equity share capital. Shareholders funds. RE. EAT in this case being 34. Average being, you have to add this and divide this by 2. What's the value? 1924.5. Refer working of number 2. And the ultimate value being 1.77%. And finally, you have to calculate the ACP, average collection period. Days or months in a year divided by debtors turnover ratio. So ACP is equal to days are a month in a year, otherwise 360 days, divided by inventory means debtors turnover ratio. Debtors turnover ratio, no, in numerator turnover, denominator debtors. But as it is going to be the division, okay, turnover should be in the denominator and debtors should be in the numerator. Turnover means credit sales into average receivables. 360 divided by, as we have not been given the information regarding the credit sales, the entire sales will be assumed to be the credit sales 22,169 multiplied by average receivables. Debtors being the receivables here. So you have to add these two and divide this by 2. So fourth point here be 1331.5. Now you will be getting 20 rupees. Okay. Hope now you clearly understand this. These kinds of questions are rarely asked. Yeah, of course, you cannot neglect. Sometimes may be asked. It was asked in CA Inter around 20 years ago, carrying 12 marks by the time. Currently, in the case of ratio analysis, ratios given, you have to decode the statements, balance sheet preparation as well as income statements. For that, let's now start with the question number 4. Okay. If it is clear, text me with more direction. Make it faster. So online students keep responding. Archu, Srividya, Sureka. I got the message only from three of you. What about the rest? Clear? Now, question number 4. We have been given current ratio, liquid ratio, working capital. Two ratios, one data given. Calculate current assets, current liabilities, liquid assets, and stock. See, if the current ratio and the working capital is given, very simple. Current ratio is nothing but current assets by current liabilities. You can write this way, will be the working capital. Current assets minus current liabilities is the working capital. The current ratio being 2, 2 means numerator is 2, denominator is 1. 1. Then the working capital should be 1. Here the given data is 1 lakh. You put the 1 lakh here. 1 share is equal to 1 lakh means 1 share current liability is also 1 lakh. Current ratio should be 2 lakhs. So if you are being given current ratio as well as working capital, the simple way to decode is this one. Current assets are divided by current liabilities is going to be written in the vertical format. CA minus CL is equal to working capital. In case of liquid assets, the formula being liquid ratio, liquid assets by, if nothing stated, current liabilities will be taken. In the absence of bank overdraft, unless specifically stated, you don't consider the bank overdraft. So in real scenario, you might have solved a number of your final accounts and all. Rarely you see the bank overdraft. Say, same happens here also. We assume most of the cases we don't have the bank overdraft. In that case, liquid ratio is equal to liquid assets by, rather than liquid liabilities is the current liabilities only. Is that clear? So this ratio being 1 by 1. Now, this value what we have calculated can be posted here 1 lakh. So current liabilities being 1 lakh calculated from the current ratio and working capital. From that, very easily you can calculate the liquid assets should also be 1 lakh. So we have completed current assets, current liabilities, liquid assets. What about the stock? Stock is nothing but current assets minus liquid assets. Current assets in this case being 2 lakhs and liquid assets in this case being 1 lakh. So the difference between these two is the stock 1 lakh. Clear? Shall I go on to the next one? Fifth one. Now let's move on to the next one. Number 5. Calculate current assets, current liabilities, liquid assets from the data given. We have been given current ratio and liquid ratio. Current ratio is equal to current assets by current liabilities, which is 2 bar 1. Liquid ratio being liquid assets by liquid liabilities or current liabilities. If bank overdraft is silent, it is 1 by 1. Okay. We have been given the stock. If the current ratio and working capital is given, then the earlier model is applicable. But if the current ratio, liquid ratio, and stock given, if the denominator being same between the current ratio as well as liquid ratio, then automatically the difference between these two will be the stock. Okay. Current assets from current ratio 2 times and liquid assets from liquid ratio 1 time. The difference between these two is nothing but stock. Okay. Note, assume no, what's that? No bank overdraft. So we have been given the stock 1 lakh. This is given. Rest of the two you can calculate using the cross multiplication. This is also 1 lakh. This is 2 lakhs. Note number 3. Note 1. Note 1. Note 2. Note 3. Now, current assets being 2 lakhs. We got this 2 lakhs from working note number 3. And here, liquid asset being 1 lakh, we got this from working note number 3. You can refer this. Give the reference number. How can you get this? Do the cross multiplication to get the rest of the things. This is 1 lakh. Do the cross multiplication. This is 1 lakh. Clear? Hope now you'll be able to understand. Shall we move on to the next one? 6th. From the following information, prepare balance sheet. Okay, you have to prepare the balance sheet. If you are supposed to prepare a balance sheet from the given ratios, just to follow the method what I am going to use here. I am going to prepare the balance sheet here. Balance sheet. So here we have been given working capital as well as bank overdraft. Then liquid liability will be available here. Fixed assets to proprietary ratio, resource and surplus, current ratio as well as liquid ratio, all are given. We'll start with the ratios here. Number 1, current ratio. What's the formula for current ratio? Current assets by current liabilities. The value being 2.5, 1.5. Second formula being for liquid ratio. Liquid assets by definitely here liquid liabilities. It's not current liabilities because we have the bank. 1.5 divided by 1. And we have been given the fixed assets to proprietary ratio. Fixed assets to proprietary ratio. Proprietary fund. The value being 0.75 and this will be 1. So you have been given current ratio as well as working capital. That's the first point where you can break. From the current ratio, current assets minus current liabilities is the working capital. The relationship between current assets and current liabilities from the current ratio is 2.5 and 1.5. The difference between these two is the 1. Here we have been given working capital being 2.4x. This 1 is equal to 2.4x. Okay, this is given. Do the cross multiplication to get this one. This is 3.6 lakhs and current assets should be 6 lakhs. Whenever any data available to be posted in the balance sheet, I request you to finish your posting immediately. Current assets being 6 lakhs.
2.5 into what?
Huh?
2.5 into
Current liability is 1. Okay. Thank you. 4 lakhs. As 2.4 lakhs is 1.5 times and 1 time should be 1.6 lakhs and this should be 2.4 lakhs. Sorry, 4 lakhs. Whatever the information you're supposed to post in the balance sheet after finding can be posted immediately. Here current assets being 4 lakhs. And current liabilities being 1,50,000 rupees. 1,60,000 rupees. Okay. Clear? Now, liquid ratio. This you can break. Liquid liabilities as well as bank overdraft. Here the bank overdraft being 40,000, 120 should be the liquid liability because if we add up these two, you will get what? Current liabilities. Clear? Now I can feed the data here. Liquid liabilities in this case being 1.2 lakhs. 1 share is equal to 1.2 lakhs found out from the balance sheet. Or how do we get this? Current liabilities minus bank overdraft. That's how we got this. Give the reference, how did you calculate? So by doing the cross multiplication, 1.8 lakhs will be the liquid assets. Okay, I feed that here. Stock being 1.8 lakhs. We got this from working note number 2. And balance will be liquid asset. Liquid assets being the balance sheet figure. 4 lakhs is the total current assets. Stock 1.8. 2.2 should be liquid assets. You have to first post that directly the total current assets and current liabilities. Then later you have to break that to small items like stock and liquid assets and all, so that will be very comfortable to score better. Now, one more thing. Fixed assets and proprietary fund. Okay, the difference between fixed assets and proprietary fund is the liquid working capital. In your balance sheet, fixed assets, working capital, proprietary fund. This is a simple formula, like you can keep this in your mind. Okay, so here working capital being 2,40,000, 2.4 lakhs. Okay. Now, proprietary fund being 1 share, fixed assets being 0.75 share. Am I right? From this ratio, we can get this value. By tallying this, you will get working capital should be 0.25. The 2.4, what you get is that even 0.25 share. 3 shares should be 7.2 lakhs is the fixed assets, and the total being 9.6 lakhs, and your proprietary fund being 9.6 lakhs. Okay, owner's fund. Proprietor fund comprises two items. One is capital, another one is accumulated resource and surplus. Here the resource and surplus being 1.6 lakhs and balance 8 lakhs is the capital. So from the working note number 4, share capital, okay, capital, the value being 8 lakhs, reserves and surplus 1 lakh 60, and then fixed asset 7 lakhs 20. If I total, then the balance being 11 lakhs 20. 11 lakhs 20. Clear? In case of decoding from the ratios, you first write the ratios and whatever available information feed and get the rest easily. Is that okay? Proprietary fund exclusive of current liabilities, which is the limit capital impact. Proprietary fund is otherwise capital impact. You can understand. Sometimes it may be shareholders' funds. In case of shareholders' funds, we assume we don't have a long-term debt. That's how we can assume. As predominantly we don't have a bank overdraft, right? Similarly, when the property ratio is given, unless we have the long-term debt, we assume that we don't have long-term debt. We don't have the long-term debt. That's an assumption here. Yes, come on, join with me to solve this. From this, you have to prepare the balance sheet. Similar illustration. If you suppose to prepare balance sheet, immediately prepare the balance sheet also. Skeleton balance sheet should be there. Equity share capital 1 lakh. Okay, 1 lakh. Given. The relevant ratios, current debt to total debt. Current debt. Okay. To total debt. Value being 0.4 divided by 1. Total debt to owner's equity. Total debt to owner's equity are simply 0.60 divided by 1. Fixed assets to owner's equity. Fixed assets. As two terms are connected with the connecting word to, first will be the numerator, second will be the denominator. That's how you can easily guess. Fixed assets divided by owner's equity are simply the value being 0.6 by 1. Total assets turnover. Total assets turnover. Turnover should be the numerator and total assets should be denominator. Okay, as there is no connecting word, second term should be the numerator, sales divided by total assets. Okay, the value being 2 times. And inventory turnover ratio. Cost of goods sold. I could not calculate cost of goods sold, so I take the sales. There is no GP details at all, right? So, inventory turnover ratio, turnover should be the numerator, inventory should be the denominator. In the denominator, opening and closing inventory given, then you can take the average, but we don't have any opening and closing information, so closing inventory can be taken. Usually, if the denominator being stock contains no profit, numerator should also be exclusive of profit. But there's no any GP information anywhere in this illustration. We are sure sales may be taken here. That's how you have to guess sometimes. So ratio seems to be pretty simple, like, but lots of guessing will be there, right? So that's why students may get confused while writing the questions in the exams. Be careful, right? So one of the easiest chapters to score better mark. But problem is, immediate guessing is the problem. Okay. Now, here we have been given only equity share capital. We assume this is being the equity. We don't have any other resource. As I already told you, lots of assumptions will be there. So we have only one information. There is no equity, there is no equity shareholders fix. Only equity share capital is given, then that equity share capital itself will be equity or equity shareholders fix. So these are the guessing you have to do. Okay, so here it is given 1 lakh,
60.
and here also it is given 1 lakh. Okay, given. Okay. So numerator can be easily calculated. Total debt being 60,
Fixed assets 60.
and here fixed assets being 60. Now here the total debt 60. We calculated this 60 from working note number 2. Now by solving this you can get the current debt 24,000. Current debt. Whatever the information you calculated to be posted in the balance sheet, immediately after arriving, you just post that in the balance sheet. Here, non-current liabilities, current liabilities. You know that the total debt will be 60,000.
24,000.
We arrived this from where? Total debt, working note number 2. And non-current liabilities, current liabilities are given 24. We got this 24 from working note number 1, and this will be balancing figure.
36.
Hope now will be giving a clarity in your presentation. Fixed assets being 60,000. Also calculated from working note number 3. Working note number 3. You know that the total being 1,60,000 because like I say all the items they posted, and after subtracting 60 the balance being current assets. Current assets 1 lakh. How do we calculate? Balancing figure. Balancing figure. Is that okay? Now the total assets we calculated from here to here, working note number 6. The total of liability side is equal to the asset side. I post that here. Total assets being 1,60,000. How did I get this? From the working note number 6, which is nothing but total of the balance sheet. From this, it is very easy to calculate the sales. Sales should be 3,20,000. Now here, sales being 3,20,000. I got this 3,20,000 from working note number 4. By doing the cross multiplication, you will get the closing stock 40,000. So in current assets, stock being 40,000 and liquid asset being the balancing figure. If you add up these two, you will get this value. We got the stock from working note number 5, and balancing figure will be for liquid assets. Liquid assets should be 60,000. Is that clear? I cannot break the 60 further. Okay, I cannot break this further. If I'm able to break further, you can break. Okay. Maximum we will try to break all the 6 into smaller element so that you will be able to score better mark. Clear? Now let's go on to the next one. This one is clear, right? Question number 8. Using the following data, complete the balance sheet. Balance sheet is also given. If the balance sheet is given, that itself an information for you. So we don't have any information beyond this. In the balance sheet, like I said, we have creditors, long-term debt, and shareholders funds. In the asset side, cash, debtors, inventory, fixed assets. 7 items to be calculated. Only that. Is there any bank overdraft? No, sir. Do you want to calculate any payables like that? Information is there. No need to worry about it. See the approach here. GP shareholders funds is given. So shareholders funds in this case being 6 lakhs. GP margin, GP by sales into 100. 20 by 100. Second one being credit sales by total sales. 80 by 100. Total assets turnover by total assets. One being 0.3 by 1. Inventory turnover. So here you can take the cost of goods sold. Why? Because GP information is given. If the GP information is given, then you can take the cost of goods sold. Inventory turnover ratio. Cost of goods sold divided by average stock, but we don't have opening closing stock. So then we can take the closing stock only. Value being 4 by 1. And ACP 20 days. ACP is equal to 360 days. 360 days in a year will be taken, also given here. Divided by credit sales. Only due to the credit sales we get the ACP. Into receivables. Closing receivables. Here the ACP value being 20. So if we know either receivables or credit sales, we can get the other one easily. Current ratio. Current assets by current liabilities. 1.8 by 1. Seventh one. Long-term debt divided by equity. Long-term debt divided by equity. Equity. 40 by 100. Is that clear? GP is given 54,000. And we have been given shareholders funds. I can post that here. Shareholders funds 6 lakhs. These are given information. Given information. G means given. Try to find out one after one here. Sales could be 2,70,000 rupees. We got the sales value using the working note number 1. Now I can go for solving the second one. Total sales we already calculated 2,70,000. This one we got it from working note number 1. And credit sales can be calculated easily. 2,16,000. And here sales, nothing stated in total sales only. Total sales being 2,70,000. We got this 2,70,000 from working note number 1. So by doing the cross multiplication, we get the total assets. 9 lakhs is the total asset. I get a balance sheet item, immediately I can post that in the balance sheet. 9 lakhs. We got this 9 lakhs from the working note number 3. Okay, 3. From that you can get the total of liability side also, which is 9 lakhs. Now creditors and current long-term debt both together should be 3 lakhs. Is that okay? We'll see that later on. And cost of goods sold. So working note number 8. Sales minus GP. Sales is 2,70,000. GP is 54,000. And cost of goods sold will be 2,16,000. We got the sales from working note number 1. GP given. Cost of goods sold is the balancing figure, 2,16,000. Now I fit that here, 2,16,000. How do I get the 2,16,000? From the working note number 8, we got it. Do the cross multiplication to get the closing stock. 54,000 is the closing stock. Closing stock. So inventory details we now knew, so I am going to post here 54,000 from working note number 4. Then ACP details. Here we know the credit sales. We got the credit sales 2,16,000 from working note number 2. From working note number 2. So 20 is equal to 360 divided 2,16,000 into receivables. By solving this, you will get the answer. So receivable is equal to 2,16,000 into 20 by 360. What's the value? 12,000 is the receivables. Okay. So debtors being the receivables, 12,000. How did I get this? From the working note number 5, I got this value. Now, current assets and current liabilities relations. I don't have the current assets and current liabilities, I cannot solve this now. So I try to solve it for 7th one. In the 7th one, we can calculate the long-term debt easily, 2,40,000 rupees. 2,40,000 being the long-term debt. Here the value being 6. We arrived this from 6. Creditors can be easily calculated as a balancing figure, 60,000 rupees. That's why I told you, whenever you get any information to be posted in the balance sheet, post there itself. Otherwise, you will get stuck. Balancing figure. So creditors, the only current liabilities we have, I can post that here. This is working note number 9. So current liabilities in this case be 9 lakhs, so 60,000 rupees. We got this as a balancing figure while preparing the balance sheet. Working note number 9. If we do the cross multiplication, 1,08,000. Current assets being the summation of cash, debtors, and inventory, all the 3 together, which is 1,08,000 rupees. So from this it's very clear. This 1,08,000 we got this from working note number 6, and balance sheet should be the cash should be the balancing figure. 42,000. In the asset side, 4 assets are there. We found out the 3 assets value. Fixed assets value can also be now easily calculated based on the ultimate balancing figure. What's the value? 7,92,000. 7,92,000. Hope you'll be now able to understand this. Ninth one. Ninth one. Now, come on, join with me. So, balance sheet is given with few items here. Beyond that, we have no items here. Is that clear? Using the following information, complete the balance sheet. Total debt to net asset. Total debt to net asset. Net asset is nothing but assets minus liabilities. 1 by 2. Okay. Total assets turnover. Sales by total asset. 2 bar 1. GP on sales. GP by 6. 30 by 100. ACP. ACP is equal to days are months, but here days only 360 days divided by credit sales multiplied by debtors or receivables. This is 40 days. Inventory turnover ratio. Formula is directly given, so you have to take the cost of goods sold divided by closing inventory. 3 bar 1. Acid test ratio. Liquid ratio. Liquid ratio. Acid test ratio. Liquid ratio. Liquid assets by liquid liabilities. 0.75 divided by 1. Now, this net asset is otherwise called as equity. Equity shareholders funds. Equity shareholders funds in this case be 10 lakhs. Total debt includes only current liabilities. We don't have long term debt. We don't have long term debt. So here the net asset being 10 lakhs. This is nothing but equity share capital and resource and surplus. Okay, net assets. How do you calculate the net assets? Assets minus liabilities is called net assets. Otherwise, that's the asset side approach. In liability side approach, equity share capital and resource and surplus are added to get the net assets. So the net assets, 10 lakhs being the 2 share, then total debt should be 5 lakhs. So the current liabilities being 5 lakhs. We got this information from working note number 1, the total value being 50 lakhs. Now you post that 50 lakhs here. Now, what about the total assets? 15 lakhs. We got it from working note number 7. Okay. Okay. Now sales should be, this will be from working note number 7. Total of balance sheet. Total of balance sheet. Then this value should be 30 lakhs. And sales being 30 lakhs, GP should be 9 lakhs. This sales we got it from working note number 2. And cost of goods sold, sales minus GP is the cost of goods sold. Sales 30 lakhs, GP 9 lakhs, 21 lakhs is the cost of goods sold, working note number 8. Working note number 8. Now, Here is cost of goods sold being 21 lakhs. We got it from working note number 8. And do the cross multiplication to arrive the closing stock. 7 lakhs. Inventory 7 lakhs. We got this value in working note number 5. Right. Here, we don't know the credit sales, so the total sales is assumed to be the credit sales here. We got the credit sales value or sales value from working note number 2. Working note number 2. Now you can get the value. Debtors is equal to 30 lakhs into 40 by 360. Yeah. What about the debtors value here? 3,33,333. So here the debtors being 3,33,333. Working note number 4. Working note number 4. Liquid asset by liquid liability. We don't have bank overdraft. We assume that no bank overdraft. We now know the current liabilities being 5 lakhs. We got it from working note number 1. The total debt will be equal to current liabilities only. Okay. Now do the cross multiplication. 3 lakhs 75,000 is the liquid asset. Liquid asset is nothing but total of debtors and cash. 3.75 lakhs. We got the 3.75 lakhs in working note number 6. Cash will be the balancing figure. 42,000. 41,667. Tally this to find out the balance for fixed asset. Hope this value be 4,25,000. Clear? Question number 10, one of the comprehensive illustrations. From the question number 10 of PQR Limited, you have to prepare P&L account as well as balance sheet. You have to prepare P&L as well as balance sheet both. Let's now try to solve this solution. Number one being GP. GP by sales how much? 15 by 100. Number 2 being net profit by sales 8 by 100. Raw material consumption. Raw material consumption. 20% of working capital. Work cost. Is that okay? In the relationship between raw material consumption and work cost, you find out the work cost. In that 20% represents raw material. Fourth one being direct wages. The relationship between direct wages and work cost, 10%. Fifth, stock of raw material being 3 months usage. Raw material stock. Raw material consumption into 3 weeks. Into 3 weeks. 3 months usage. Clear? Stock of finished goods. Finished goods stock. Finished goods stock. To work cost. 6%. 6%. 7. ACP. Debtors is equal to credit sales by 360 into ACP days. ACP days means 60 days. Okay. 60 days credit sales will be the debtors. All sales are credit. All sales are in credit. So we have to prepare trading in P&L account and then balance sheet Apart from that, we have been given financial ratios. These are the 5 more ratios are also available. Yeah. 8th one. Fixed assets to sales. 1/3. Then fixed assets to current assets. 13/11. Current ratio. Current assets by current liabilities. 2/1. Long-term loans. Long-term debt divided by current liabilities. 2/1. And capital to resource and surplus. 12th one. Capital to resource and surplus. 1/4. I just finished copying all the ratios. We have been given only one value here. The value of fixed assets as in the date amounted to rupees 26 lakhs. All the sales are on credit. So fixed assets total being 26 lakhs. Fixed assets 26 lakhs. 2600. I put the values in thousands. Put the value in thousands. Using this, what can be calculated? Here we have 26 lakhs. Wherever fixed assets we have now, we can feed the data there directly. 26 lakhs. Only in these two places. Now you can solve this. Current assets should be 22 lakhs. And here 78 lakhs. Okay. So we have been given current assets also. The current assets value be 22 lakhs, 2200. Here in thousands. Here in thousands. The current assets what we calculated from working out number 9 can be posted here. Do the cross multiplication. 22 lakhs. 11 lakhs. 11 lakhs. Current liability 11 lakhs. I put the value here. Current liability 11 lakhs. 1100. Long-term debt to current liabilities. Current liabilities 11 lakhs we got already from working out number 10. So it should be 22 lakhs. Long-term debt. Long-term debt. 2200. I cannot solve the 12th one now, but what we can do, we can total the balance sheet. 4800. 4800. We get the capital, resource and surplus both put together will be the capital employed. This will be the balancing figure. 1500 will be the balancing figure. The relationship between capital and resource and surplus will be the equity or net worth. This 5 share is nothing but 1500. We got it from balance sheet. Missing data. Then 4 share should be 1200 and 1 share should be 300. 1 share should be 300. We got this value. So 300, 1200. We got the balance sheet complete. Apart from that, we now need to solve the other things also. Here, what we can solve? We got the sales here. The sales can be fit wherever it can be posted. So here, 78 lakhs. We got it from number 8. Here also 78 lakhs from 8. Okay, find out the net profit. 8% on 78 lakhs. 624. 6.24 lakhs. 6.24 lakhs. What about the GP? 11.7 lakhs. Now, I can prepare the trading and fee report. Here the net profit being 624,000, GP being 11,700,000. 11 lakhs, sorry, 1170, 11 lakhs 72,000 rupees.
Working capital asset minus.
Yeah, will come. It's not working capital, it's what cost. Oh my god. That's that phrase. These things are what cost. How can we calculate the work cost? Work cost is otherwise named as cost of goods sold, which is nothing but sales minus GP. We apply the same in receivables management. You can remember the cost of goods sold. In the trading account, from the sales, if you subtract the GP, you will be getting cost of goods sold. The cost of goods sold is nothing but work cost. With that work cost, administration, other cost will be addable, which is given in the P&L account. Okay, without considering the administration and selling and distribution expenses, the cost will be called as cost of goods sold, otherwise work cost. Here, sales being 78 lakhs, GP being 11.7 lakhs, and
66.
okay, your work cost being
66.3.
66.3 lakhs. Now I feed that here 66.3 lakhs. Similarly, here 66.3 lakhs, 66.3 lakhs. Do the cross multiplication to get the missing data like raw material consumption
13.26.
13.26 lakhs.
6.63.
And here
6.6.
6.63 lakhs. Here
3.978.
98 lakhs. 397.8. Okay. 397. Okay. 3.97. 8 lakhs. Okay. Now, in stock, current assets, we have what? Raw material stock or stock of raw material. How much is that? We have to calculate. We got the raw material consumption. Raw material consumption in this case being 13.26. We got it from working note number 3. Then raw material stock should be 3.315 lakhs. So raw material stock being 3.3315 thousands. And finished goods stock being 3978. In case of debtors, credit sales we got already 78 lakhs. Do the cross multiplication to get the debtors. Is it 13 lakhs? So here debtors being 1300 thousands. Now, raw material consumption in trading account, opening stock plus purchases minus closing stock, which is nothing but raw material consumption, 1326. Direct wages 663. Sales 7800. What more? We have posted everything. By telling the trading account now, the balancing figure could be other work expenses. Balancing figure will be called as factory overhead or works overhead. Balancing figure in this case being 4641. This is balancing figure. Remember, from the sales, if you subtract this value, this will be the work cost, and on that GP is calculated. GP is transferred here 1170. By telling this, the value what you get is nothing but admin and selling and distribution overhead.
546.
546. Balancing figure. You don't have any other options. You have to consider this weekly balancing. Current assets being 2200, where raw material stock, finished goods stock, debtors as well as bank balance put together will be the current assets. If there is any balance, may be considered as bank balance. Come on. What's the value you have? 170.7. This one is 331.5. 331.5. This is 397.8. I stand correct. Okay, now we get the answer tally. Now let's move on to the next illustration. Okay. So in question number 11, we have been given skeleton trading and P&L account as well as balance sheet. Apart from that, other information. So you have to finish up preparing the trading and P&L account for the year ended and balance sheet as on the date. Right. Let's start with one after one. Current ratio. Current ratio. Current assets by current liabilities. 2/1. Closing stock. 25% of sales. Third one, proposed dividend to paid up capital ratios 2:1. Proposed dividend and paid up capital.
2/3.
2/3.
Gross profit ratio.
And gross profit ratio GB by sales 60/100. Loan is half of current liabilities. Loan and current liabilities. If the current liabilities being 2, loan should be half 1. Transfer to GR to proposed dividend ratio. Transfer to GR. Okay, this is the numerator. Denominator being proposed dividend. Being 1:1. Seventh one, profit carried forward is 10% of proposed dividend. Profit carried forward divided by proposed dividend 10/100. 10/100. Okay. I just keep it here so for working it simple. Apart from that, we have been given Provision for taxation is equal to the amount of net profit. Provision for taxation equal to the amount of net profit of the year. Net profit of the current year. Ninth one. Balance to credit of GR at the beginning. Opening GR is twice the amount transferred to GR from the current year's profit. Transfer to GR. If the transfer amount is 1 and opening should be 2 times. Provision for taxation as well as net profit being equal ratio. So you have to finish up all these ratios here. Okay. I'll keep it all. So what are the information is given here? Paid up capital is here, 1000. Here we have been given opening stock, purchase, means direct expenses, and this one and commission. Balance brought forward from the previous year. Some information is given. Let's start with the paid up capital, which is 1000 rupees, because I've seen somewhere paid up capital here. The third one, paid up capital being 1000. So from this it is very clear the proposed dividend should be 667. And this being 1 by 1. If the proposed dividend is 667, we got it from third. Transfer to GR in the current year also 667. 667. And proposed dividend 667 and transfer. Profit carried forward to the balance sheet being 66. I can round off to 6. Okay.
9 being transferred to GR.
Transfer to GR. Okay. Which one? 9th one. Opening GR to transfer to GR. What is the opening GR? Not given. Transfer to GR.
6
We just now calculated. 667. And opening should be 1334. So what are the available information? You try to feed all these things here. In the beginning 1334, in the end 667. Okay, I can write directly here, no issues. 2000 rupees or 1 rupee plus or minus. Okay, rounding up error will be there, no problem. And profit and loss account. Profit carried forward is this one. Huh? Okay. What more? Loan and other things. Right. We try to post some other information from here to the income statement. Transfer to GR being 667. Proposed dividend being 667. Transfer to GR being 667. Balance being current year profit carried forward being 66. Balance transferred to the balance sheet. So then profit and loss should be 66. 66 or 66 or 67. Rounding up error. Now, what is the total of this? 1400. You can feed that 1400 here also. Net profit for the current year being 1260. We got this as a balancing figure. Transfer here 1260. 1260. And the tax as well as current year profit 1:1. Net profit for the current year we already calculated, which is 1260. Net profit for the current year 1260. And these two are same, means 50% taxation 1260. From this information we are a provision for taxation also 1260. By tallying the P&L account, we got the entire details of the debit side. Total the debit side then
1,320.
how much? 3,320.
Gross profit 3,220.
3,320. And gross profit is the balancing figure 3,220. Balancing figure. This is transferred to this place 3,220. And we have been given GP ratio here. GP ratio being 60%, where GP is 3,220, and you can find out the sales here
5,367.
5,367.
6.
Closing stock. Closing stock is 25% on sales.
1,340.
1,342 from this details. Now total the credit side is over, so you can total it up. 6,709. 6,709. And purchase should be the balancing figure 2614. 2614. So we have completed the trading and P&L account fully. Trading and P&L account fully. Closing stock being 1,340. Do you have any doubts here in P&L account? Let's go here. Yeah. Try to finish up. All the ratios are in this single page. I brought all the ratios in single page. Now try to finish it. We have been given closing stock being 1,342. 1,342. And then loan account 10%. 10% loan. Here, interest on loan being 60 rupees. Interest being 60, where the rate of interest being 10% means what could be the loan? 600. So here it should be 600 loan. And fifth ratio is the relationship between loan and the current liabilities. Loan being 600.
1,200.
Then current liability should be 1,200. Here current liability is being 1,200 and current assets should be 2,400. Current liabilities we have only one item 1,200. Current assets total being 2,400. Comprises three assets. Stock, cash given, so balancing figure will be the debtors. 933. That's 933. Okay, 933. 933. Clear? 933. What about the liability side? We have posted all the items. Simply you can total the liability side. The total being 4867. Definitely the same will be in the asset side also 4867. Only one asset value is pending, other fixed assets. By tallying and get the balancing figure for that 1,067 will be the final. Clear balancing figure. 1067 will be the balance. This was asked in the exam, carried 20 marks in CA. I taught the lecture in the classroom. It was in May 2008. By 2009-10, by the time I think 10 and 11 I explained, in 2012 the same illustration without any number change also asked in CA exam once again. One of my students thought he could clear the examination but he failed. Next again re-attended my class and I gave the reference number. This is from working note number 1 and 2 and how I calculated all. Got stuck, sir. Do I want to finish with the reference number also? Yeah, of course, reference number must. Means working note also must. 20 marks has gone. If he could have received 20 marks for this, definitely he could have cleared by the time itself. Thereafter, he cleared Inter. I think he had pending final. Okay, then he got employment from outside India, Malaysia, Singapore, somewhere he worked for some time. Later he came to India. I don't have contact. Okay. So I am telling you the story is, it's solving is very easy. You can get the answer easily. By mental calculation itself, you can get the answer. The problem is, how do you arrive this? Is it copied or did you really work out? If you say that I worked out this, then do you have any probably working notes in the paper answer? Yes, sir. Then okay, you will get the mark. Else you will not get the mark. Clear? Come on, make note of it. In this case, the loan carries 10% interest. In the P&L account, we came to know that the loan being 60 rupees. So definitely, loan and interest. The connection between loan and interest. If the loan is 100 rupees, interest should be 6 rupees. Here, interest is 60, then what should be the loan? Do the cross multiplication. Maybe 600 rupees. That's how we do this. If the loan being 600 rupees, interest on that at the rate of 10% being 60. Usually loan is given, you calculate the interest, but in this illustration, interest is given, we calculate the loan in inverse manner. Now, let's start with question number 1. DuPont chart. This is developed by DuPont company. Okay, 3-factors model. Okay, so here, what is the intention of the CFO? Give more return to the owners. Owners being the equity shareholders. So, their intention is to raise the equity, return on equity. Return on equity is nothing but paid by equity shareholders. Okay. Now, to improve the return on equity, what are the factors to be compared? Then DuPont has 3 major things for contributing the improvement of ROE. One is profit. If the company gives more revenue, definitely earnings available to the equity shareholders will be increasing. That is called NPV. NPR. The formula being PAT by sales. Next one is turnover, activity ratio. How far it is active? Okay, so already guided you know. In the case of turnover ratios, all these things are named as activity ratios. If the turnover is higher, okay, if the stock is 1000, turnover is 10,000, 10 times rotating, it means your profit will be rotated by 10 times. Similarly, the assets and turnover has a connection in designing the return on equity. So that is called asset turnover ratio. Asset turnover ratio. Okay. For this, the value being turnover by or sales by asset. Sales by asset. Similarly, how much of the equity share capital sourcing the assets? Asset could be purchased using what? Owner's fund or debt fund. Okay, if you are sourcing the assets by equity share capital, levered or unlevered, that's the logic. To what extent of your fixed assets or total assets is levered, means sourced by your own equity share capital, which is called equity multiplier. Equity worth for the investment. Equity multiplier. As per this one, asset by equity shareholders fund will be taken. If you multiply all the three formulae, you will get the return on equity, isn't it? Sales got cancelled, asset got cancelled. Ultimately, you will get this value. The main intention of this DuPont chart is to increase the return on equity, strengthen this one, strengthen this one, strengthen this one. By strengthening all the three, by multiplying, your ultimate return on equity will be higher. Okay. So now, how can we increase the return on equity? Concentrating on this part. Sir, already it is better than only, sir. Okay, then we don't need to worry about that. What about this scenario, sir? It's weaker. Then we can now improve this one. Or if you feel this one is weaker, you can improve this one. So the three components, no, you find out whether these three components are really doing well or some of the components are not doing well. If some of the components are not doing well, put importance for that, focus on them so that that particular component is also increasing, which is a contributory for the ROEs. Ultimate goal is to improve the ROE. So for that, DuPont has designed this chart. Three factors model. In case for the CMA Inter Group 2, you have 5 factors also. We'll study that along with the additional management accounts chapters, right? It's not for CA here. Let's now deal this one here for an illustration. SSA Company Limited, company's details are given here. Revenue being 1 lakh, net income PAT being 15,000, asset being 80, equity being 50. So ROE being PAT 15,000 and equity shareholders funds being 50,000. So 30%. And by applying the PAT by shares, PAT being 15,000. What about the sales here? 1 lakh. So your profit after tax is only 15%. Only 15%. Is that okay? Though the profit after tax is only 15%, your intention is to increase return on equity. So, but actually the return on equity is 30%. Though the profit is only 15, but return on equity is 30 means it is not only profit matters, some other things also. Those two things are the activity ratios, asset turnover ratio. Next one is sourced by equity or debt. For the assets, how much is sourced by the equity will be the equity multiplier. Let's see the next one. Sales being 1 lakh, asset being 80,000 rupees. What's the value you are getting? 1.25. And equity multiplier. Total asset is 80, but out of 80, 50,000 is sourced by equity share. Balance 30 may be sourced by debt. Now come on, tell me. 1.6. 6. Okay. So this 1.6 is nothing but 1.6. Okay. 1.6 times of the equity shareholders fund will be in asset. Means 0.6 may be funded by long-term debt. Okay, otherwise debt. If you multiply the 3, you will get 30%. So your focus is to concentrate on all these things. One is all about profitability. Next one is all about activity. Third one is all about leverage. So for rising the equity holders return, concentrate 3. Work better, make huge net profit ratio. Next, don't keep the assets idle. It should be working properly so that the income should be higher. Third one being, if there is a cheap source of fund available, so like borrowing the debt, so borrow the debt, it's cheaper. By borrowing that, you can improve the ultimate value also. For example, if this one being rather than 1.6, if it is being 2 times, what happens? 15 into 2, 30 into 1.5, 37.5% will be the value. So your return on equity is now increased to 37.5% by making this from 1.6 to 2. It means 80,000 rupees, no, equity fund should be only 40,000 rupees. Another 40,000 could be by way of long term debt. Maybe lower interest rate, maybe there. Okay, you learn that in leverages. So leverage concept is there. Due to the leverage, borrowings will have the lower cost, that lower cost can be fit here. Is that clear? Hope now you'll be able to understand this one. Do you have any doubts here? So with that, ratios completely over. Go on to solve n number of illustrations from the ratios to master. Okay, because lots of guessing also there. Okay, see you in the next class.